Good morning. My name is Rob Newman. I am one of the partners at Carter Collins and Meyer, a firm of accountants in North Manchester, working with businesses across Cheshire, Lancashire and Greater Manchester. This is a really short one today. This is going to be what accounting records should I actually keep. And in the process of what accounting records should I actually keep, I am going to have to do a shout out for my Keep More, Lose Less book, because an awful lot of what Keep More, Lose Less talks about is what accounting records you have to keep. There are a range of reasons for this. There's the pure compliance factor of what the law says you have to do. There is also the tax planning aspect, because the better your records are, the more tax that you are likely to save, because the more things that you can actually claim. If you have strong, robust records, it's much easier to deal with HMRC and the demands of the government than if you have a shoebox full of receipts. I work with plenty of people that still have shoeboxes full of receipts despite all the digital age, and it can work to a degree. But if you are going to have the shoebox full of receipts, this is going to be your guide as to what you should put in them. So, what should you actually record? Well, whether you are International Global PLC or whether you are Fred the Plumber, fundamentally, accounts come down to 3 boxes. Box number 1 is everything you sell. Everything you sell should be recorded in some way or another and put in that shoebox, that ledger, that spreadsheet, that piece of accounting software. Now, there's a fundamental change coming to that in 2029. There's going to be called what's electronic invoicing. Electronic invoicing is not just sending somebody a PDF, it's actually sending an electronic file that they can import straight into their accounting software. And that's going to become mandatory from 2029, according to all rules that are in place at the minute. And pretty much forces the end of shoebox records if MTD hasn't already. But it is still the same principle. Everything you sell needs to be recorded and stored in a container. Then, everything you buy. If you buy something for the business, related to the business, wholly and exclusively for the purposes of your trade, you need to capture it, you need to record it. Now, in the old days, that was again literally a shoebox and you'd put the piece of paper into it. That today might be taking photographs of it and storing it on a Dropbox. It might be taking a photograph into an app for something like auto entry or Dext or HubDoc and recording it and capturing it there. The principle is still the same. Anything that you buy that's related to your business, you should capture and record. Now, the rules around that are vast. I do set out some of them in my book. I do have some of them listed there. The book's available on Amazon. It's $7.99, or if you reach out to me through this video, I will happily send you a PDF copy for free. The rules, though, are not just what's in that book. They're vast. It's about 1 million pages of what's there. So you may well find you're still having a discussion with your accountant when you try and claim something. And because one person can claim it doesn't necessarily mean another one can. There are all sorts of quirks and anomalies depending on what it is that you actually do. One story that I often tell is to do with a consultant psychiatrist. The consultant psychiatrist in question used to dress incredibly well, and she actually loves Hermes scarves and Hermes handbags. And if you know anything about ladies' fashions, you will know that I'm talking now of things that cost several £1,000s. And this particular lady wanted to put them through her accounts, and all the sort of case law and things around it, I said, there's no way you're going to be able to do this. She insisted, she got a tax inquiry, and the tax inspector actually agreed with her that she could claim these things, despite every accountant, I would imagine, saying you can't. Which is why I say it depends on circumstances. There are some definites, there are some grayer ones, and there's individual things. But if you think it relates to your business, capture it properly, record it properly, have that receipt, have that invoice, physically put it in the shoebox, or metaphorically take a photo of it and put it in your Dropbox or whatever it is. The third thing then that you absolutely definitely need is your bank. You should have a separate bank account for business. Whether you're a sole trader, whether you're a limited company, an LLP, whatever format it is, you don't legally need one. You can run your business through a personal bank account from law. The bank may not like it, and it makes your records incredibly messy. And in the event of a tax inquiry, you are now opening up HMRC to every single thing that you do. They now have the right to ask you everything that's going on through that personal bank account. Which is why, again, I would say keep it separate. It makes the record keeping so much easier. And in this day of Tide, Starling, Monzo, Metal, all these online banks, it's so much easier than it used to be to get bank accounts. Again, depending on your individual business, you may need one of the high street banks. If you deal in cash, you probably certainly do need one of the high street banks still. But have that separate bank account and then keep the statements, keep the records. Better still, have a debit card linked to that bank account. Use the debit card to make your purchases and capture all those things that you do on a day-to-day basis. Now again, keeping those bank statements, you might have a shoebox that you physically put them in, or you might well have a PDF file. I love it if you send me a PDF file. I love it if you send me an Excel spreadsheet of your sales, photographs of your purchases, and a PDF of all the bank statements for the year. That, for me, is fantastic nowadays. That's exactly what I would love you to keep. It makes my life so much easier. If you send it as paper, I scan it and turn it into those things. If you've already done it, it's going to make your job cheaper for me to do, easier for me to do, turn it around better. And then you might even venture into keeping accounting records beyond there. Some of the softwares that are available nowadays are really good. My flavour of the month at the moment, because this is always a movable feast, is actually Free Agent. I think Free Agent are doing a fantastic job for small businesses at this stage. I think they're producing a really good bit of kit. It can be free if you have a metal bank account, or it can be almost free if you're paying for it. Now, ask me that question next month and I might well give you a different answer, because the software ebbs and flows depending on what development they've done and what pricing they have to it. A couple of years ago, I'd have probably said zero. A couple of years before that, I'd have almost definitely said Sage. So if you're watching this in 2029, come and speak to me. I may well not say something. I may say something completely different that I've never even heard of at this point. But if you venture into accounting software, do the basics. Reconcile the bank. That means checking that what's on those bank statements actually agrees to what's in your accounting software. If it does, and it's so much easier to do with things like bank feeds nowadays, you're there. You have everything. Everything you buy, everything you sell, the bank. Now, even Mega Global PLC is fundamentally based on that. They then get into more and more analysis. You might hear things like fixed asset registers. You might hear things like sales ledgers, purchase ledgers, nominal ledgers. They're all great. They're good stuff. A sales ledger is a list of what you are owed by your customers. A purchase ledger is a list of what you owe to your suppliers. And a nominal ledger is a recording of all those things that you own and owe. They're not always necessary in small businesses. I do like them. I'm an accountant, so clearly I would be encouraging you to get into that. But if you capture those basics, everything you buy, everything you sell in your bank, you're going to be 90% of the way there. Now, anything else you should keep? Well, you probably want to keep records of stock. You probably want to keep, if you've got any employees, you want to keep your purchase and payroll records and your employment contracts. And indeed, anything related to your business legally needs to be kept for 6 years, probably wants to be kept for 7, and if you've got employees, needs to be kept for 20. Electronic storage makes that so much easier. As I've said earlier, it doesn't have to be hard copy, but if you're still on hard copy, that's not a problem. And it really is that easy. So, my name's been Rob Newman. I do have a range of books available to guide people through. I do lots of these YouTube talks and I hang out on LinkedIn. I'd love to see you there. My firm is Carter, Collins and Meyer, and we work with small owner-managed businesses across the Northwest.